we're back. Yes, you're at the Solomon Project, where it's not how much you make, it's how much you keep that counts. I'm your host, Richard Burns. We're in Pennsylvania, somewhere near Carlisle, Pennsylvania. We're about to hop on 81 northbound. I had a very interesting conversation with a homie who happens to be MAGA, and understand, I'm an investor, okay? I'm an investor. I've been investing for a long time. Let me see. Let me do the math. Let me do the mathematics. Because I think, if I'm not mistaken, I've been doing it for about 28 years, I think. Yeah, I think that's what it is, 28 years. So I've been in the stock market for 28 years. The most important thing that I learned was I needed to detach myself from my emotions when I made a decision. That's one of the major things. I never approached the stock market as a gambler. If you're day trading, you're gambling. And by the way, this is not financial advice. And no, I was never a gambler. So I never approached the stock market as a gambler, as a day trader. When I started out investing in dividend yielding stocks. If you guys don't know the story, let me give you a quick breakdown. 1996, I heard an infomercial on the radio station on my way up Connecticut, from New York up to Connecticut. So here's the infomercial. Boom. And it caught my attention. The reason it caught my attention is because they spoke about entry into the stock market without the barrier that existed back then. The barrier was the initial amount that you had to lay down. The initial amount that you had to lay down back in 96 was the equivalent of $66,000 today. So if I wanted to open up an account back in 1996, I would need to open it up with about $66,000 if it were today. Back then it was $10,000. And then you got to consider the fact that when you buy or sell, it can cost you up to $100 to make that purchase or to make that sale. It's not up to $100 to do both. No. No. You want to buy? Up to 100. You want to sell? Up to 100. So you can imagine if you were a day trader where the average minimum number of trades was 50 trades, whatever little bit of money you made was gone in fees, gone. And yeah, all you made was a little bit of money, because day traders get off on being right directionally. All right, so I'm not gonna include short selling. I'm just gonna talk about just buy low, sell high, right? Very basic. A day trader would just get off on the fact that the stock price actually went up. It might have only gone up pennies, but just the fact that it confirmed whatever they saw in their technical analysis. Bing, time to sell, let's get out. Yeah, I made $5. Oh, but the fee was $50. Okay, but so what? So what? Because check it out. Check this out, okay? I was right. I was right. So I could slap myself on the chest and declare my victory. I was doing my technical analysis, my chart analysis, and I timed it perfectly, and it went up when I thought it was going to go up, and bing, let's go. Let's go. Again, made $5 on the trade, but the fee for that trade was $50. So you're negative 45, but you're happy because you were right. Yeah, see, you were right. And because you were right, what are we talking about? I was right. Yeah, minus 45, yeah, whatever, but I was right. I was right. You don't make money by being right and being negative at the same time. That is not how you make money. In order for you to make money, you got to be right and be positive. That's how you make money. And if you do options, you could be wrong and still make money. Kind of crazy, but that's the fact, Jack. Now, what in the fruit flavor is going on over here? I'm supposed to be in this left lane, but I don't understand. They're supposed to be going inside the truck stop, maybe? I don't know. I might have to pull some kind of maneuver over here, because this right here is crazy. So, boys and girls, you had, I'm gonna pull a stunt. I'm gonna make a right, make a U-turn, and then approach it from a different angle. There you go. Because I have to get on the scale, figure out what my weight distribution is. But meanwhile, back at the ranch, where was I at? Yeah, okay, so day trading, right? Not the move, is gambling. But I never got involved in the gambling. I never gambled. I did my stuff the way I was supposed to protect my money, which is long term. Long-term investing. Buy and hold. Nothing crazy, nothing exotic. That's how I started. And going back to that infomercial, the infomercial introduced me to DRIP accounts. Yes, DRIP accounts. It's an acronym. Delta Romeo India Papa. DRIP. It stands for Dividend Reinvestment Plan. That's what it stands for. Dividend Reinvestment Plan. Now, you have to own stocks to get dividends. You got to own stock. Stocks that pay dividends. If you don't own stock that pays dividends, then you're not going to get dividends. There are other stocks that you can buy that don't pay dividends. What are those? Those are called growth stocks. You buy it, they increase in price, you sell it, and then you do the math. How much did you buy it for? 50? Okay. How much did you sell it for? 70? Okay. So you made a $20 profit. You ain't get no dividends from that one, but you made money after buying and selling it. That's how you made your money. So it was a growth stock. It wasn't a dividend paying stock. It was a growth stock. Okay, cool. So got two ways. Those are two ways right there. That's cool. You can do that. Now, just a footnote, okay? Just a footnote. Remember, this is not financial advice. This isn't even tax advice. Go to your CPA if you want tax advice. But let me explain. You got two different types of taxation when it comes to the profits that you make on stock. You got short-term and long-term profits, okay? Short-term and long-term. What is short-term? When you make that profit by buying a stock and selling it under a year, that's called short-term capital gains. When you buy the stock and then you sell it after a year, that's called long-term capital gains. Try to remember this, okay? Try to remember that short-term capital gains pays a higher tax rate than long-term capital gains. Buy it today, sell it under a year, make a profit. You're going to get taxed as short-term capital gains, which is just like what they take out of your paycheck. But if you buy it today, sell it after a year, make a profit, that profit is going to get taxed at long-term capital gains, which is 15 to 20%, as opposed to whatever it is you're paying right now. You're probably paying something like, I don't know, 27%, maybe more. So something to consider. Dividends, that's just a little more complicated. Because if you got a stock that you're holding on to, depending on whether or not you purchase that stock a certain amount of time before the dividend X date, you might be paying short-term capital gains. Now, the stock that you've held on for a while now, for many, many months, many, many years, the dividends pay long-term capital gains, qualified dividends. I don't want to confuse you with that. Check it out. Check it out, party people with the place to be. Yeah, I might become a rapper, y'all. I'm thinking about it. So I just broke it down on a little something to consider with regards to taxation. Again, I'm not a CPA. Go see your CPA about that. So no, I don't. I'm careful about my sources of information and what I trade in, what I purchase. Thanks to, I'm going to call them my team. Even though if you ever bump into them or ask them, they won't know nothing about being a team of anything. Because when I speak to these people, I speak to them individually. We don't talk in a group. One happens to be an economics professor in Connecticut. One is a nephew of mine who's an economist for a bank, a huge bank, an international bank. Another one does logistics for the country, and has his master's, or I don't know if he's got his PhD now, in global logistics. No, business management. I'm sorry, not global logistics. He does that, but business management. No, business administration. My apologies. Business administration. Yeah. So, and a couple of other people as well. You know, former brokers or current brokers, whatever the case is, that I've known throughout some time. Now, yeah, where you get your information and what your sources are of extreme importance if you want to do well. If you just want to brag that you've got a trading account, by the way, if you go down to the description, there's an amazing app that you can use, that you don't have to be some genius. You don't have to be a broker. You don't have to be anything. You just have to be consistent. One of the keys is consistency. And that app will help you be consistent. Sure, it'll help you be consistent because you don't have to do anything after the initial opening of the account. Once you open the account, you put down how much you want to contribute on a weekly basis, monthly, yearly, whatever it is that you're comfortable with, and where it's going to draw the money from. It's going to do that however, whatever amount you want transferred in from your bank account, whatever amount it is. It could be $1. So $7 a week, because the weekly deposits is the minimum time interval. So you can throw in $7 a week. That's $1 a day. You don't have to do anything. You attach your account to your debit card so that anytime there's some little bit of change left over from a purchase, it takes that little bit of change and it invests it for you. Yes, you heard correctly. It invests it for you. And you'd be surprised, even $1 a day, you'd be surprised how that account starts to blow up. You don't have to pick stocks. In fact, the number of stocks that you can pick is extremely limited. But it has some exchange traded funds that will help you immensely. Because if you're doing nothing, you will acquire nothing in terms of money. And this, it's so easy, it's incredible. There's no trading involved. It's all long term. You don't see it, you don't feel it. It's incredible. It's incredible to deposit what would be the equivalent of $1 a day into an account, into an investment account, and then wait a year, look at it, and then suddenly you got $450, $500, who knows? $1 a day. Listen, you got money like that where you don't need $500, $400. You don't need that, because if you don't, hey, I can give you my cash app. You can give it to me. I don't know what to do with it. But do you understand what I'm saying? By the way, I'm overweight on my drive axles. Gotta fix that. I'm gonna say a name. And I know because, you know, I was in a conversation with my MAGA buddy. I got a name that I could throw at my MAGA buddy and all other MAGAs. I got a name. I throw that name at them. Woo! It's like throwing holy water on a vampire. They start to smoke. When you mention this name, they absolutely lose it. George Soros. Woo! You use that name in front of somebody who's MAGA? Oh my goodness. They don't shut up. Insults, all kinds of stuff come out their mouth. They become potty mouths when they hear that name. Potty mouth. Crazy, I'm telling you, crazy. And now here's the deal, right? George Soros, he's the enemy. He's MAGA's sworn enemy. If you were to break down and analyze the situation, analyze that relationship, you would probably start bugging out, wondering, you know, what, you know. Soros is a billionaire. He owns a hedge fund. He's a billionaire, multi-billionaire. He's up there. He's got a lot of money. And there's so much hate for this man. One of the things that they get on his case about is what happened to the Bank of England, because he made some moves with some bonds and the Bank of England wound up getting crushed. Yeah. Which is crazy because his partner gets... I haven't heard his partner get any heat because of that. Which is a curiosity for me. How is it that you can do something that another person did, but you get pure heat and your partner doesn't? What's going on there? Something's up. My question is, what is up? That's what I want to know. That's what I need to know. What is going on? Why are you getting heat and the other guy ain't getting heat for the same thing? Because they both did it together. So what's the deal? What's good? Explain that to me. Well, George Soros is sworn enemy of MAGA. Now, MAGA voted for Trump. Of course, that's why they're MAGA. They voted for Trump. Why did they vote for Trump? Number one reason, the economy. Number one reason, the economy. MAGA was complaining that they couldn't buy no eggs because it was too expensive. They couldn't eat because the food was too expensive. MAGA. So, they voted in Trump, and Trump is supposed to help them with that. Trump is supposed to help them get some food. Trump is supposed to help them eat. Trump is supposed to help them pay lower gas prices. All that good stuff. And Trump has already selected a multitude of people to serve in his administration. So, Trump is looking out. Trump is looking out. He ain't gonna let that George Soros guy get away with anything. Nah, George, you ain't getting over, buddy. This is MAGA. Not only is this MAGA, but check this out. And this is really strange. This is something I don't understand that's going on with MAGA. MAGA needs to check in and get some psychological work done, because I don't understand this part. This part doesn't make any sense. How it is that you think that a person born into wealth identifies with you? How do you where does that come from? Wealthy people don't identify with you if you're working class. What are you, a truck driver, a mechanic? What do you do for a living? You don't identify with none of that. These billionaires that were born into wealth, they don't identify with MAGA, with you, school teacher, college professor. They don't identify with you. Listen, let me not say something offensive about what they think you are, because you'll be mad, and I don't want you to be mad. They don't identify with any of these people, but all right, that's what they think. To each his own. And they make their decisions based on these fallacies. But Trump is gonna, he's gonna do the right thing. He's gonna do the right thing. He's gonna get you your lower gas prices. He's gonna open up jobs, not create them, but he's gonna open up jobs because he's gonna kick a bunch of people out of the country. But let me tell what I told my boy, because Trump is loyal to his people. Trump is loyal to MAGA. Loyal. So he's going to kick Janet Yellen out. Janet Yellen was in the Biden administration. And that's the administration that supposedly broke you financially, right? Okay, cool. So we're replacing Janet. Janet's out. We don't want to hear her mouth no more. Not with regards to the country's economy. Shut your mouth. I got somebody new and improved. This guy's going to eliminate hunger. Right here. He's going to eliminate hunger. He picked somebody that's going to save us. It's going to save the nation. Now remember, Trump was born into wealth, right? Let's not forget that. That's a very important piece of information. He was born into wealth. He don't know nothing about our struggles. Nothing. I mean, if you live in reality, you understand that. But if you live in La La Land, yeah, you can tell yourself whatever. You believe whatever you want. Scott Bessent is going to be the new and improved. New and improved, y'all. New and improved Secretary. Treasury Secretary. New and improved. New and improved, y'all. Now, in one of the phone calls I had with one of those people that I told you that enlightened me on a bunch of stuff when it comes to economics and investment and all that good stuff. All that good stuff. He's telling me this guy's name, Scott Bessent, like this is a big deal. I don't even know who this dude is. Who's Scott Bessent? And why are you making such a big deal about it? I'm not talking about the MAGA guy. Because after I told Magnatius the name, he didn't know who it was. But then when I broke down who he was, he lost his mind. At first. But then he caught himself. And soon after he lost his mind, I guess he found his mind. And now he was defending Trump. Defending Trump? What do you mean? Why would he be defending Trump? Let me break it down for you, okay? Scott Bessent was a hedge fund manager for none other than George Soros. What? You heard correctly. He was a hedge fund manager for George Soros, the evil one. The evil one. I wonder if MAGA's going to call. I doubt that MAGA will call him out on that. Most of them don't even really follow economics. They just repeat whatever they hear on the radio or wherever they get their stuff from. But this dude, man, listen. Scott Bessent. Yeah. Once I told my MAGA buddy who he was, at first he thought I was making it up. He thought I was a liar. How could that be? Yeah, I guess you don't really understand how people who are born into money, you don't understand how they think. I guess you don't understand the reality that he don't give a damn about you. That's not what he's there for. They want to believe that that's what he's there for. Or they'll come up with something like, well, it's a better pick than, is it? Okay. Scott Bessent. Go look him up. Former hedge fund manager for George Soros. Wow. Imagine your sister coming home with some dude and before she brought him over, she was talking about what a great guy she's got. He's her boyfriend now. Great guy. And then come to find out, he's the dude that mugged your parents. Even got the opportunity to stab your father, trying to take his wallet. And then when you tell her, that's the dude that did dad this way, and she comes up with an excuse to stay with him. Yeah. That type of feeling. I don't know. Guys. Scott Bessent. Go MAGA. Stay fresh. And keep it profitable.
Arabam Dacia, seviyorum çift kalem maça. Göremedi kimseden fayda. İşler